All right, hi everybody. This is Wes with Pikes Peak Trades and trying to get my weekend video out to you a little bit earlier, just after an incredible week and really quite a crazy day on Friday. I do think we saw on Friday the capitulation low, and we got the recovery that I think is going to propel us into what I'm projecting as the final bull leg of the move up since March 2020. So we're looking here at the QQQ weeklies, and I had tweeted this out before I'd actually stepped away from the markets, that a move into price here at 297.46 would actually cause me to hesitate. And I got to retract that because we are allowed to see a wave 4 into 1 overlap during a fifth and final terminal wave, which I have as intermediate 5 of primary 3. So that actually, I think, encourages me that this actually is the correct bull count here, and because of this increased volatility that we're seeing, I think we are in and will begin the last leg up. Now, of course, we have to be able to distinguish between the bearish moves. And the bearish move would be that we completed a wave A, 5 waves down, and we're looking now at what would eventually be for this count a dead cat bounce in a B wave, and then down to more painful lows. So how are we going to distinguish that? Well, let me now get you into some smaller time frames here, and we're going to be able to distinguish that by looking at the difference between whether we get an impulsive 5 waves up or do we get 3 waves up. Now let me get you into the even smaller time frame on the 15-minute to show where and what that might look like. So I am actually thinking that the market will give us a pullback on Monday. I think it would be designed to keep the most traders on the sidelines and guessing as possible. I actually think it's probably best for this final bull run if there's actually less bulls participating. I actually, in a contrarian way, think that is actually most bullish. So what I think could happen for the market to be the trickiest would be that this does count as 5 internal waves up, which I think is very encouraging for the bull count. But what that could also lead to is some weakness on Monday that I think would just set an inverse head and shoulder pattern for the bulls. But that would be the 1, 2, 3 that would get the bears excited too. And where I have these fib bounces would correspond exactly to resistance off of this broken trend line, which I think again would just be just the perfect kind of questioning for what's going to go from there. Now, of course, we need to talk about invalidation levels. So within this count can actually retrace in B. It can retrace, if I get back to the daily, it can go all the way back and even extend above this. If this is some kind of, well, you'd have to count it as a 3, as a 3-3 expanded flat. Okay, so, but I think based on the amount of selling pressure that if we're going to see bearish resolution, we're going to see the failure. And this is probably too much time. I have that way scooted out in time. This probably needs to be just right in the middle or the end of next week, maybe right at the top of this really great looking bull flag, in my opinion. Okay, so now let's take a look at Nasdaq. And what's so interesting on Nasdaq, you do not see the 4 into 1 overlap. Okay, so if people are upset that happened on the Qs, well, you didn't get it on the Nasdaq. You know, maybe we get it next week. But this valid bull count is still projecting, and I think we've just seen just an overdone puke out of really good growth stocks as kind of the shock for what's been going on in the bond markets with yields and bond prices. I think we could see a massive rotation back into growth, and we see value then lag on this last leg. So I am not ruling out the possibility that by summer, I would extend my time frame to summer, we could see the Nasdaq above 16,000. Okay, and so if you think that that's outrageous, well, you need to weigh that against some very, very, what I would also consider to be a little outrageous bearish counts that you saw posted on Twitter this week. So I think the baby got thrown out with the bathwater, so to speak, here, and we saw some punishment in some really good stocks. And I'm optimistic that we see a rotation back into growth for one final swing. And I do think it is just going to be one final swing, because look down here, we will have even more powerful negative divergence across many, many indicators, most likely when we get done with that final bull leg. Okay, so let's look at SPX. And I had tweeted out that with SPX, that what I was really wanting to get was just a close in the 3780s. And we got much more than that stick save. We got a weekly close above the 8 EMA, which is incredible. That has to get your attention. This is the trend following EMA. Look at what it's been doing all the way through these sustained bull legs, all the way for the last year. We got that on the close, which I think adds some evidence that we had a significant reversal. Okay, now as well, we have to leave the possibility of bearish counts that are still on the table. My projection is it's unchanged. I did not panic change any counts except individual names. There was nothing that I did this week on the indices other than alerting you to the various possibilities. And why would I change it now? I do think we will see the resolution up, and I've got 4,600. If I extended that out to the summer, it's possible we get to 4,900. That would actually be another fib extension. Okay, getting into the daily here. Oh, and by the way, I'm going to show you the short term, my futures chart as well. I don't want to forget about that. Let me just do that now. Was that actually the daily? Because I'm doing this just right after market close, I'm a little bit more disorganized. Looks like I might have accidentally closed. Okay, no, I've got the short-term futures on my short-term chart. Okay, so we did see that close right up against a previous rail, which is, again, I think adding a little bit of evidence that I think we could actually see a little bit of a pullback on Monday, which I think would, again, it would just add that confusion, which I think would actually be healthier for eventually propelling the bull market more powerfully. So I've got this in here. If we see bearish resolution, a 1, 2, 3, and a 4. So yes, it is overlapping, but that can happen in the A leg down of this particular count here. So let me get you now into that short term. And what you'll notice is the invalidation levels. Okay, so the invalidation levels, it would have to be above 39.14. Okay, sorry, that's for the blue count. That's for the blue that would be looking for an intermediate low. For the red most bearish count, it is right here at 31.71, almost 31.72. If that is traded into at any point next week, then the red count as counted, the most bearish version, is off the charts. If 39.14.50 is broken, then the blue version is off the charts. And I had tweeted this out at the end of the trading session Friday. That is exactly why I think it's wise for a waiver to keep multiple counts on the chart. I use them to either confirm or non-confirm bull or bear moves. Okay, so again, what do I think might happen? I think to keep all these counts alive, which the market just loves to be as tricky as it can, I think we could see a pullback to test the getting back into this channel. And on futures now, what would that look like? So I think it could look like here rejection temporarily at the 200 period MAs that I love to follow on either the 15 or the hourly, and that would lead us to a pullback that would raise some doubt before we can get that last push up of a minute degree, not last as in bull, but of a minute degree. I do think that because of my projection, if the bull market continues, that pullback should be bought. So I did not heavily buy the close out of respect for the selling that could happen in the bear counts, but also just because I do think that we're going to get some volatile pullbacks. The VIX is still right at 25, some volatile pullbacks along the way, but I will be buying them as long as we can see this support hold, which on S&P is now at the 200 period 15-minute MA for my day and my swing trades. Okay, now let me get into IWM. We had an amazing hammer candle to finish the week. You've seen that already. Back again above its 8-week EMA. Back into the daily. I didn't have to change this count. This is still a minor 4 low in place. It will be in place until it's broken, which then the blue count would take over, which would be an ABC. We'll see that on the short term. I have IWM still ready to move up strongly, and maybe not quite as strongly as growth, as I've indicated in tech, and that's yet to be seen. On the short term, here is that potential of what maybe it's going to be a little scary. It could even go even deeper of a potential inverse head and shoulder, and I would be a buyer there. I would love to see that happen. Where does this count go invalidated? Well, we're looking at the C leg of an intermediate 4. So that means 4 has already overlapped 1, which is allowed. So that means the breakout's not confirmed until 226.71 is broken. Okay, XLF has just been extremely strong. Look at that daily hammer candle. Just incredible. I don't think that is a signal of buying exhaustion. It could be a signal that maybe XLF will slow down relative to the other ETFs and indices, but I just think this strength is going to continue. It barely even pulled back. Now, if we do see the bearish resolutions, I would first give it an ABC down, and it would target this gap close. But I think its minute 4 is in, and I think it's got a 1-2, and I think it's moving up to 35 to 37 eventually to finish this run. Okay, let's get into individual names here. So some individual names back on weeklies. We want to look at the big boys. The big boys are going to have to lead. If we're going to get the bullish resolution, we've got to undo this selling and get back. And we saw here on Amazon what I think is a nice double bottom off of a double zigzag. This has been a really, really hard name to count. This is the count that I think would end its selling. It bounced through its 50-week MA, and it moved back into the mid part of this channel. Now, it didn't obviously catch the 34-week, but I do think that partially looking hammer candle is enough for me to think that that low is in. Now, the bear count here is really bearish, and it would be implying that we're actually still right in the middle of this minor 3. So if I take you to the daily, now on Amazon, I think we would be looking here for a bounce in this minute wave 2, okay? And you're going to notice consistently on my charts that I've got the 0.618 fibs here. That's going to be our marker for a lot of names individually to retrace against. That if this is the C leg down, that we would want to be seeing price start to conquer these 0.618 levels. If we move up and fail there and move down, then the bear has resumed. So getting names out of these downward bear channels is extremely important. On the short term here for Amazon, we're going to be looking at that possibility right in here. I would even probably extend this up But I'm kind of wondering if first, like I'd indicated, are we going to get an opportunity for some really viable pullback? So that would actually make the bears think that maybe right here it's already in, although I can count a sub degree 1, 2, 3, 4, 5. This is going to lead into some doubt. If it just keeps falling, that's when the red bear count takes over. So we're going to have to see exactly what happens if we get a pop and a drop, or if we get an immediate drop. You know, that's why right now we're far from out of the woods. Don't really have much resolve, except that Friday did its job in keeping the bull cases alive. So we get to Facebook, and Facebook, it did not break below this low. It's held above it. In fact, it barely broke below the previous week's low just by a matter of pennies. I still think Facebook has one more really good push up, breaking out of this triangular target or a pennant, if you'd like to call it, and moving up Facebook into a new all-time high. We get into its daily, and I had been pointing this out. This rectangular consolidation area, once it breaks, it's going to break big, and we are approaching the top. We've been hanging out at the bottom for a while. We're now back at the top off of this. It could reverse and break down. If it does, it's going to be very bearish. If it goes up, I think that's one of the fuels for QQQ. And let me show you that, because this is pretty compelling, I think, on the short term. I think we might have had a 1-2, and that breakup could happen. So on a sub-degree, we could see a pullback Monday, a pullback here to test the 200 period MA. If it holds, let me see if I can even extend this bull flag that I think it's now out of. A pullback to test that holds, I think, would be very bullish, and then the confirming move up. Now, your target out of here is just the width of the rectangle added to the top. So that's why I do have a target at about 278 to 280, which has also been really important pivot resistance. So if we get the bullish resolution, again, I think we're going to see some viable pullbacks on the way. Let's keep moving through some of the other big names. And we see here Google. Google, what a leader here in not pulling back and holding against the previous week's low. And I think Google's going to be making a run up into the 2300. So you can see that fibbed here on an intermediate leg, and then eventually you'll see that final target. I don't think there's any reason here to be bearish on Google. And I think an indication that we're going to get resolution in tech. Look today at that punch out of that bull flag. That is significant. Now, again, might we see, due to this rail, a short-term pullback, possibly back to the 8 EMA? Absolutely possible. And again, I think a buying opportunity. If I show you that on the short term, I think it really should jump out at you just what that looked like today. And we had right off the open, we had that pop, we had that drop back, but when it regained and pushed up and out of that bull flag, that would have been a long entry. It's possible maybe on a sub-degree we get a little bit of pullback here on Google, but you can see even my targets for early next week, I have targets approaching a new all-time high. Okay, so let's look lastly in the big tech world into Tesla. And oh, you know what? I skipped Apple. So sorry about that. Had Apple a little bit out of order here. So Apple, here we're looking on the weekly. And yes, it does look like a fake breakout, but you know what? It held its 34-week EMA. I still have that in a 1-2 count. As long as price remains above this too low, you know what? I think Apple can also participate. We get it into the dailies. I'm sorry, that's on GLD. We want this one. And here we go. So for Apple to invalidate the bearish count, it needs to trade above 128.72. Okay, so I do think it put in its intermediate low. I would be targeting it at some point a minute wave, and probably would have to go right here towards that falling 50-day SMA. That would at least confirm invalidation of this count. Now, the bearish count obviously is going to be very bearish and would involve either a quick fall down to test the 200-day SMA or all the way to the top of its July gap area at $100. But I love the look of that daily hammer off a new low, off of previous divergence that was set, and I do think this at least intermediate term low is in place in Apple. So let's get to Tesla. And Tesla got punished during this correction. Is this a cycle top? And we're looking at an ABC down. It's absolutely possible. As long as Tesla is above 503 and it was above it at 539, I think it's got one more push. Now, I'm not willing to go much more than this. I have had this target for Tesla for months, and I'm not going to change that and revise it upwards. I'm going to leave that because I do think it is possible that Tesla maybe tops before the rest of the market. But let me extend that out because I'm actually now extending my timeline here for this top all the way out into summer. So I need to extend that maybe out into earnings. Could correspond to earnings, but we're going to see here. So into the Tesla daily. There we go. Sorry for this. Right after the market closing, I'm just a little bit more disorganized than usually am, but it's all right in my head, and I just wanted to get it out. Okay, disregarding this weird spike, which I don't exactly know how to explain, we're going to see here a spike down into an area that held both a fib and it also held this lower rail. We're, again, just like everything else, going to have to distinguish a three-wave move. By the way, I should be getting rid of some of these as these really no longer apply. Again, distinguishing a three-wave move into a bearish bounce, and I've got that right at a 50% fib, which is typical for B waves. Anything that would go above 0.618, so let me go ahead and just add that on now to that here. So anything that would move above 780, right at that important pivot and low for this first leg down, that's going to help confirm, I think, that Tesla's going to set a new all-time high. If I show you that on the short term here for Tesla, look at this. Look at this amazing lower channel hit. And that's got me thinking that this low is in, at least for the bounce. There again, you're going to see that target here. Actually, these are the correct targets. I think the previous daily hadn't had them updated. So above 762 is what we're looking at, but certainly above 780 for full confirmation because of the position of that wave one down. Will we get kind of a 1-2? So will we test the mid channel and pull back? And that's the area that I would look to buy. Remember, I don't always like to bottom pick. I actually did today for a few long-term plays that are going to come up in a little bit. But in general, I want to look to buy the sub-degree wave 2 pullbacks. Okay, that takes us through the big tech. Now let's get through some individual names that I definitely want to show you. And we've got Boeing. So we're going to see here three really strong names in a row. We've got Boeing with what I think is just a nested 1-2. This would have absolutely been a dip buy. This isn't one. I should have bought some longer term holds here on Boeing. I didn't. But I think that Boeing with that hammer candle back above the 8-day EMA is very, very compelling going forward. Okay, another healthy chart. We've got Disney, and this is a little bit out of order here. Let me get into Disney here on the daily. So another awesome looking hammer candle. I think Disney, again, I didn't have to change this count, that it held this minor 4. We're in a 1-2, and I've got Disney moving up. This might be conservative for Disney at 211. It's very possible we see that to the next fib, which would be at 230. On the short term, What would we be looking for? Well, we've got to get back into this channel. And again, would we see the possibility that we get, as I don't have it marked, but this as a left shoulder ahead and a right shoulder would be an awesome opportunity for you early in the week on Disney. Okay, I tweeted this out, DraftKings. Now, some incredibly painful selling off of the top at $72. So at one point it was down 20% from that top. But notice it's kept its nested bullish 1-2. And I remain bullish on DraftKings. This was a name that I did add longer term. Okay, going through alphabetically here, Netflix. Netflix also has kept its bullish 1-2. It did not trade below this 2. I think Netflix recovering this potential bull flag was very significant off an awesome looking, again, the theme, the daily bullish hammers. I think we could see some powerful resolution up in Netflix. And what would be some of the triggers? So here we might have had a little mini inverse head and shoulder. A mid-channel move with a back test, I think, would be viable. And that would set kind of a more spread out inverse head and shoulder somewhere out here. Okay, so that would be my entry target for Netflix. Now, if you want to play this obviously more safely, then you're simply going to want to wait. Let me extend out this bull flag. You're simply going to want to wait for the confirming break out of the bull flag. And even then, look at the run that you could still be looking forward to. So that breaks, let's say around 550. You could be looking for a run up into 650, and that could happen up through the middle of April. Okay, Roku. So let me move this back here because Roku came very, very close to hitting. It's what I have as either already potentially a primary 4 that's done, but I'm going to be leaving that, and I got to drag that down, as just an intermediate 4 that I think is in place here on Roku, that I think Roku could have a big, strong push up towards 520 by the summer. So we look here on the daily. We drag that down a little bit. Like a lot of other names, I think either we're going to see an A with a B bounce, or we've got the AB with 5 waves down, 1, 2, 3, 4, 5, into that 4 low. So its hammer candle back into this part of the channel, I think, was significant. And what would we be looking at for the entry? So again, is it already an inverse head and shoulder? But I would be looking for a hold here. If we can see a 2 pullback that holds, let's say 340, that is absolutely going to be my trigger to get in on Roku. Okay, we'll finish this video with the Z. We always got to look at the zoom. Okay, now zoom, I have not updated this chart because zoom made a fresh low, and I think the one I actually wanted was the weekly first. So this count here is no longer valid because we traded below this. So what are we looking at on zoom? Well, it's either just a sliding over of P2 or a sliding over of 4. I actually, at this point, I actually prefer here on zoom this blue count. I think zoom makes a primary top with the rest of the market this summer. So I'm actually going to be updating that after the video is done to show that as my primary count, which would give zoom now 5 waves up to finish into the summer with the rest of the market. Okay, gang, so not my normal timing for getting this out, but I just had everything right in front of me and was up and active at the close. I think we did see significant a market stick save, if you want to call it here. I am projecting that we do get back to new all-time highs and the final bull run by the end of the summer. If I just show you back, just to wrap up here, for context, we can use the S&P. Now, of course, we've got those invalidation levels that we need to be looking at, and I think it was the wise play to be a little cautious into the weekend with the bear counts on the table. I am looking to buy dips, and that's going to be my mode. And you know what? As always, it's exciting and it was a hard week. You can hear it in my voice. I am tired, but I do think we got what we needed to see at the end of this week for the bullish cases to continue.